Hey everybody, hope you're doing well. Hopefully you had a great week of trading. Hopefully you played off our recommendations last week for the Qs. They're up about 2.5% for the week thus far. Um, but as usual, today we're covering our weekly NASDAQ-100 and QQQ ETF um, guidance for the week of May 31st. And for the sake of brevity, we're just going to call it the Qs. Let's just jump into it. So first, about 15 seconds of some house cleaning. First, what is Prep to Grow? Prep to Grow is an AI big data platform that predicts how a company will perform and can profit be taking on that performance within the stock market. We also analyze a person's portfolio. So if you have a portfolio within Fidelity or Charles Schwab, we can go and we can look at all the investments you have and analyze the performance is going to be good, bad, or indifferent. And then we make recommendations for improvement. So that's Prep to Grow. Also, we are doing a round of funding right now. So we're considered a fintech AI big data platform, which is a great space to be in. If you're interested in becoming a part owner and investor within Prep to Grow, you can go ahead and go to our link within the slide you're seeing here, and we'll have it within the description sections as well. So let's get into what happened this week in the Qs and NASDAQ-100. Again, we predicted that there was going to be the start of a bull occurring this week, and it happened. So pretty excited about that. Hopefully you all made some good investments out of that. It's up at this point in time, 2.5% for the week. So it's a good start of the bull. Year to date, it's only up 7%. What we're looking at for our own growth projections, our growth projections have increased as well. It's 5% increase from last week. Last week we saw some flatness, and it was really just normal Q2 kind of hangover from Q1, slow down, and the Qs have started to bounce right back up. Year to date, analysts up their forecasts as well, so they're at 4%. So generally, looks like the Qs are back on track to have some growth and hopefully do a lot better than they have been for essentially the first half of the year. So what's our projections for next week? Continuing the bull. If you look to the right where we have the pie chart, essentially we have 3.2 bull signals to 1 bear signal. And there's more than twice the option volume on bulls versus bears for the Qs and the NASDAQ-100. So we have good expectations for the continuation of the bull this week. Other good reasonings is opening economy and jobs. They're doing well. Growth is increasing across the board. Outside of just the NASDAQ-100 and the Qs, again, bull signals way outpacing our bear signals for this coming week. There's start of another small bubble. Just the growth, while increasing outside of the Qs, is still not at a level you'd want to see right now, especially with an opening economy and whatnot. So maybe people are just being cautious, but the growth has got to be higher. It's only 11% as an aggregate for the year. Stock growth, I think it's 19%, and I should have written this down. But yeah, corporate growth is only at 11% for non-Qs and non-NASDAQ companies this year, which is okay, but NASDAQ's crushing it with 39% growth. So really outpacing it. The other caution is just a post-earnings blues. Not a lot happening this week. Nobody notable. But we'll cover the ones that are going to announce. So where are we in the cycle of bear versus bull? So if you look what happened in May with the pullback, we projected it back in April. The best way to look at this chart is we're currently on May 23rd for the week and what our projections are for that week. The best way to think about it is 30 days out. So what's going to happen on June 23rd? So we're projecting now for June 23rd. It's going to be some flatness in terms of the market. What we're seeing right now is that if we look at that 93 number and the 60 number, that was really the start of the bull. So we're heading into the peak of the bull for this week, which is 124 signals essentially of a bull. And so that'll happen this week. And it'll probably continue on for another week, and then it'll start to cycle out of the bull or the high growth of a bull. So we got about 2 more weeks, we feel, of bull happening. Again, everything we say, it comes out of our AI and big data platform. Investing is highly risky. Option investing is highly risky. Playing earnings is highly risky. So you got to take that with a grain of salt. While we've been very accurate on our projections week over week since the beginning of the year, or since we started this, just again, it's our recommendations. It's not gospel. You have to make your own investment decisions. So let's jump into, well, to finalize this, just probably about 2 more weeks of bull heading into it. So if you didn't get in this week, you can still jump in, but the gains won't be as nice if you got in this week. Again, with a 2.5% gain for this week, which is a good start of a bull. So who's announcing next week? Or, well, let's talk about who announced last week. So Workday, Intuit, NVIDIA, Autodesk announced. We were looking at NVIDIA in terms of who was announcing. Love NVIDIA. They beat. They beat everything. Expectations, earnings, revenue, et cetera, et cetera. They beat. They didn't actually make an announcement for an acquisition, which was nice. They didn't really have a lot of upside on the stock, surprisingly. But again, our projections, they're going to beat, and they did beat. This week, there's 3. We're going to cover one that's happening next week, which is Marvell, just some unusual option activity they want to bring up ahead of our normal kind of talking about it. But for next week, nobody overly interesting. Broadcom, Splunk, Zoom. Zoom the most interesting, probably out of the 3. But let's just jump into pricing, unusual option activity for these 3 or 4 with Marvell. So this is Prep to Grow. This is our current platform. So this is centered around what we call an active trader. So somebody that likes to day trade and do all those things. If you're a day trader, this is where we have our normal picks. If you'd like to understand pre-market and unusual option activity, this is where we get into the movers. So you can start to see what our predictions are for pre-market for some of the recommendations we have. But let's just jump into picks. So if you are a current subscriber and you want to look for who's announcing over the next couple of weeks over ETFs. So you'll just go down to this ETF within the screening section we have, or the filter, pop out Qs. You can look at JETS or SPY or whatever else you want to. Who's announcing within the next 3 weeks, hit apply. And you'll see a couple. I think we have a filter on it, so that's why you only see 2. But let's take a look at the ones for this week and one for next week. So let's start off with Broadcom. Which is AVGO, which is a little weird. So there's an actual story behind it. So Broadcom acquired a company called Avago, I think about a decade ago. And part of that, the CEO negotiated that Broadcom would take on the Avago stock symbol because he wanted to have his company be remembered forever. So, hey, it's Silicon Valley. Things like that happen. But it's lived forever, so Avago will always be remembered. Broadcom is announcing their Q2. They're a chip manufacturing company, and they're based in Silicon Valley. Chips, with the supply issues and that kind of stuff, are going to be a very hot commodity in terms of as they start to reach capacity. We've heard a lot of companies impacted by it. Broadcom is in the middle of that. They are based in, of course, Silicon Valley. Again, they're announcing their they're announcing their Q2. We've been tracking them since 2013. As we look at their growth rates, we haven't seen this kind of growth with Broadcom since 2019. So 2019 with their highest growth rate ever. This is their second highest growth rate ever for Q2. They had a big pullback, just like everybody else did, but has really ramped up. Most of the ramp up occurred in Q1. In Q2, it ramped up a little bit and flattened out. And they ramp it again in Q3. I think when we see something like that, or the algorithms are kicking that stuff out, the concern is that they may miss on earnings per share. So usually a pullback and spend and whatnot means they're trying to figure out how to get their earnings per share. So while their growth is second highest of all time, the since we're tracking them, that pullback is a sign of caution that earnings per share may be at risk. So let's talk about Splunk. Just unusual option activity. There's 2. Let's dig into this. So we're okay at predicting Avago. These guys are a call 75% over for the last 5 days. Success rate over the last 12 months, 4 out of 10 for 30 days, so better 5 days. We wouldn't buy this. I'm only showing this just because of the usual auction activity for call. So the unusual option activity, again, we would never play this because it doesn't fit our prep to growth strategy, but if you're a momentum player on unusual option activity, you may. So this is from the beginning of the month, May 11th. It's the most unusual activity. It was for the August 20th expiration date at the 440 strike price. And somebody bought 286 shares, a normal volume of 213. So, 1.34 volume to open interest. Let's take a look at the next one. Again, this one's 511, so somebody made a big play on this. This is almost 2x, so this is 1.86 volume to open interest rate. So if you're not familiar with volume to open interest rate ratio, anything greater than 1 usually gets classified unusual option activity. This is for the July 16th, 2020 expiration at the 440 strike price. Pretty big money. I mean, $2,000 per contract. So that's some pretty significant play. So that's a Broadcom. Let's talk about Splunk. Splunk. Splunk's an interesting company. We've been they're going into their Q1. And also Q1, we've been tracking since 2017. When I was at PeopleSoft, the CEO of Splunk was the general manager of the division I was in. Very smart individual, very, very good leader, very, very smart man, very, very, very smart. Challenges with Splunk, not an unusual option activity. So let's jump into the call that was here. This is from 528, or essentially today. Excuse me. This is a call. We're not really good at the predictions for them, so we wouldn't play a stock or option them. Again, earnings play is always risky, so we don't play earnings. We don't recommend you playing earnings. Options is risky. Playing earnings is more risky than options. That's our perspective. But we do expect that their call is going to happen. So some concerns with them. One, there's not a lot of unusual option activity at all with them over the last week. We haven't seen much at all. Puts, calls, whatever. The others that the stock price has halved in the last 10 months. On the put side, we're way more accurate on this, but this is the most recent prediction we have for them. And we rode that thing down for the last 10 months. Biggest challenge with Splunk. They have been flat for the last 3 years in terms of growth. Yes, the last 3 years they've been completely flat. Same growth rate, day over day, month over month, quarter over quarter, year over year. It's a challenge for Splunk. I don't have insights as to why, but they're flat. They're super flat for a long time. So with that in mind, the earnings estimates or the analysts are expecting good things for Splunk. I don't think they're going to hit it. The data doesn't support that they're going to hit it because of the flatness, so we'll have to see. I like Splunk, I like the people there, but not looking good for them. So let's talk about Zoom. We'll talk about Zoom in general. We didn't have any predictions for Zoom for a while just because they seem to be in an awkward place. We haven't seen unusual option activity for them. We've been tracking them since 2019. They're announcing their Q1. They've been the darling stock of 2020 in the pullbacks. I think most people have probably done some form of Zoom call or heard of Zoom. And of course, they're in the Bay Area just like everybody else, Silicon Valley. They've pulled back in Q1 for sure. We've seen that in their growth projections. So they may have a rough quarter with the pullback. So if we were to look at them and you want to have a kind of an option play, we expect that they're going to pull back. And they are, we haven't seen any unusual option activity as well. And they're announcing, I believe, June 3rd. So let's talk about Marvell. And this is they are announcing on June 7th. Marvell, we've been tracking them since 2013. They're announcing their Q1, and of course, they're in Silicon Valley. Marvell, I've been there a couple times. Probably, or most definitely, easily the best corporate lobby I've ever seen. High ceilings, totally high-end finishings. They have these massive fish tanks. It is a beautiful, beautiful lobby. I would go there just to see the lobby. It is that nice. Better than a hotel. 99% of hotels in better lobby than most of the hotels I've ever stayed in. It's great. These guys are good. This one we already recommend on 24th. They're already sold. It fit our strategy. We made 15%, so off of it, so quick in and out. We haven't seen a whole lot of initial option activity to them, but there's still room to grow. So we're predicting it's going to get to what, 49, and they're currently at 48. So small room, but we're expecting when they announce on the 7th, they've had good growth, so we expect good things from them, and we'll update this next week. So let's just jump in. So those are the four. So we're going to probably cover Splunk and Broadcom in our site. So if you want to see the rest for this, just go to prep2grow.com, QQQ, or prep2grow.com/QQQ. It'll be in the description. But let's just jump into what's going to happen the rest of the week. Again, Broadcom, Splunk, Zoom, they make up a collective 2.2 of the total Q holdings. So not a lot. None of these guys are going to move anything. I think Zoom, for the most part, people felt that they have to run and are going to pull back as things start to open up. Splunk, most concerned about a lot of flatness, which is interesting since they're in data centers. They monitor data in and out. They handle cybersecurity, yet such flat growth, especially with all the cybersecurity and cloud data issues and that kind of stuff. It's interesting that they haven't experienced way more growth. Broadcom, we think generally they've had high growth. Going to miss their earnings per share though. Is our algorithms projections. So that's the week. Not a whole lot of movement. We believe that it's going to be a continuation of the bull for the next 2 weeks. Next week it'll probably still continue at a good pace. The week after that it'll probably slow down a bit, but that's our predictions and our recommendations. Again, everything we do and talk about, it comes from our AI and big data platform. It's our recommendations. So take it with a grain of salt. Hope you have a great week of trading. Hopefully you had a great week of trading next week as well. But we'll talk to you again in a week. Happy trading. Take care.